All right, welcome back to another video. My name is Ian Major. I'm an entrepreneur, investor, and all-around raging capitalist. And in today's video, I want to go through just a bit of the lay of the land, so to speak, as it relates to Bitcoin. Give you just a couple different themes that I think are going to drive a lot of what we see unfold over the coming months. I'm going to try and keep it objective. I'm going to try and look at potential, bearish themes as well as bullish, but as you'll see, the list ends up being wildly bullish. And all of this is not to inform short-term price targets, right? None of that. If you haven't watched my last video, go check it out on kind of cheat codes for earning Bitcoin, where I go through the merits of dollar cost averaging and just kind of setting up an automatic savings plan essentially for your Bitcoin, where you're just buying the same fixed amount every week, every month, whatever the case may be. So keep doing that. But rather this is hopefully to give you some important signposts to potentially anticipate, dips that could present great buying opportunities. Or I just think it's really important to be able to, see the forest for the trees, so to speak, and be able to connect some of these dots together. You'll notice I have a new decorative piece here. So I've had this for a while. It's called Life is Dope. And so I bought it thinking, hey, this is pretty cool. But I think it's wildly ironic that, years later, there's actually much greater symbolism in this, whereby, fiat currency is literally dope right now, right? The whole entire financial system is like a drug addict hooked on, printed government debt. And so anyway, I thought it would maybe spruce up the background just a bit and also give us this very interesting symbol to reflect on. So without all that out of the way, let's go ahead and jump into the themes. I'm gonna just kind of rattle these off and hopefully give you a tour of all the things that are rocking and rolling currently. So let's actually start with the kind of bearish side of things. And so not surprisingly, when you look at some of the indicators and drivers that are generally correlated with Bitcoin price movement, one of those things is the strength of the US dollar. And intuitively this makes a lot of sense, right? The whole thesis of Bitcoin, or at least part of the value proposition, is as a store of wealth against the depreciation of fiat currencies via central bank manipulation and printing, right? As we've covered in many different prior videos. And so naturally, the dollar does tend to move opposite to Bitcoin, right? I mean, that's sort of definitionally the case if we're pricing the price of Bitcoin in dollar terms. But what I'm getting at is what you can see on this chart, where we're looking at the DXY or the DXY. So this is an index of the US dollar relative to a basket of other major currencies. And as you can see, really all of 2020, you had a pretty general secular trend down. And that makes sense, right? All the intervention and stimulus, trillions and trillions that came out in additional deficits to support, right, some of the COVID stuff. But then as you can see, if you really squint, you can see that as we turned into this year, there has been actually a small upswing in the strength of the dollar. And this is for a number of reasons. I hit on this a little bit in a prior video. I think markets are kind of anticipating and hopeful for a recovery now that, vaccines are being rolled out and this and that. And so that'll generally give some strength to the currencies of countries where there's this perception that, okay, maybe they're on the recovery path. And we could argue whether that's true or not, right? And whether there's, is or isn't irreversible damage that's still yet to unfold from all the, corona madness. But in any case, this is part of the reason I think why we saw a pretty soft January after that, insane kind of ramp up. And so what do we think this trend will go? Well, it could actually continue to rise. And the reason I say that is the following chart, and this is the data is from Bloomberg, but it's annotated by Luke Grumman, one of my favorite macro voices, as you've heard me say in the past. But what this is showing is by year, the net issuance in treasuries after accounting for Federal Reserve purchases, right? So, the U.S. government in this case, again, this is a little bit U.S. centric, but this obviously is the driving force for financial markets around the world. So the U.S. federal government is issuing treasuries to finance spending, right? And as we can see, there's usually in every year except one here leftover issuance after you consider how much of that new issuance the Fed is purchasing, right? And what we saw in 2020 was the Fed purchasing more than the total issuance in 2020, and expanding the size of their balance sheet, et cetera, which is what we really saw unfold over 2020. And so, without getting into kind of the mechanics of Treasury issuance and what's left over after the Fed, we can see that there's quite a large shift from 2020 to 2021, going from negative net issuance to positive net issuance, at least estimated, right? And what this means is that the Fed is planning at least to purchase a smaller share of the new Treasury issuance. What does that mean? That means that there's more of that new issuance that needs to be sopped up from other buyers other than the Fed, right? Well, what does that mean? That means that it's actually going to suck dollar liquidity out of the system, right? If it's foreign buyers who are coming back, and you've seen different news articles around, the Japanese in particular coming back a little bit to the table to buy, U.S. Treasuries again, because there was a big kind of reversal of that over the last few years, especially 2020. But suffice it to say that, if the Fed's only going to purchase a fraction of the new issuance, other buyers are going to have to sop up that additional supply, and that sucks dollars out of the global money system, right? And if that's the case, then that's actually bullish for the dollar. And so there could still be upward pressure on this. I think that's going to be a very short-term thing if it does happen. Ultimately, if this happens, by the way, you will tend to see yields start to creep up, and the government, as I've covered in prior videos, cannot afford for that to happen. And so the Fed will likely step in even more emphatically. But all of this is to say that, don't be surprised if we continue to see some volatility. And if we do, it's likely being driven in part by this dynamic. Okay, so let's move along. And really everything else on this list is incredibly bullish. So what can you say? So the next topic I want to go into is WallStreetBets. And if you missed this last week, you must have been, sleeping under a rock. I'm not going to go into all the nuts and bolts of what happened and, the dynamics of exchanges and that sort of thing. Let me know if you'd be interested in seeing a video on that. But what I want to comment on is just the sort of spirit of what happened. And I think this tweet kind of summarizes it quite well. This is a movement. I mean, this is a really big deal. This is not just kind of a fluke thing and, a bunch of kind of angry folks in their parents' basement. Like, no, these are people who would rather lose everything for the principle of the statement that they're making. And, if you've seen a lot of the comments coming out, I mean, they're directing their anger towards hedge funds, and rightly so, right? I mean, hedge funds have manipulated markets for all time. And some of the actions in response to all what had unfolded from exchanges like Robinhood and others, I mean, that looks real bad. And there's a lot of reasons why they probably did have to restrict trading on some of the, GameStop, AMC stocks, etc. But the fact of the matter is these exchanges are part of a system that is failing the people. And so when you enable hedge funds to take actions and you literally suppress retail investors from taking their respective actions, that's awful. That's, market manipulation in its most blatant form. And so this really is a lashing out at what people perceive to be the issue, right? Wall Street. And that is only a symptom of the real root of the problem. And the real root of the problem, again, as we've covered in prior videos, is the money itself. And central bank systems that we have with government fiat. That is what enables hedge funds, financial insiders, political insiders to kind of drink from the money spigot and ultimately create wealth inequality and some of the different things that we've seen are the driving force behind the anger that we're seeing. And so this is not over. I mean, some of these stocks have come back down, but this is not over by a long stretch of the imagination. I'll show you one other view of new subscribers on the Bitcoin subreddit. So again, people are kind of waking up and they're making the connection between this movement and what Bitcoin has to offer in terms of the ultimate FU to the predatory money system that we have today. So keep watching that. I think it's going to be very interesting to see how this unfolds. And I think we're really, really at the start of the end, right? And it's not to say this is going to happen overnight or over the next year even, or maybe even a couple years, but there's too many cracks in the system. There's too much distrust. Something has to give. And my bet is that we're going to be quickly seeing hyper Bitcoinization. So exciting stuff and also interesting stuff. All right, let's move on to the next topic. So the next topic is around Microstrategy's corporate event. So Bitcoin for corporations. I'm recording this in the morning on February 3rd here in Dubai. And so later today, East Coast time, I think it starts at noon, Michael Saylor and Microstrategy. So if you haven't been watching or following Microstrategy, you've also been sleeping under a rock. But Microstrategy is a Fortune 500 company that, has taken a huge position in basically making their corporate treasury Bitcoin. And they're continuing to buy as they drive additional cash flow. And so Michael Saylor, who's the CEO, is kind of the mega Chad, right? Which is kind of the meme. He is extremely vocal about Bitcoin. And if you haven't watched the Saylor series with him and Robert Breedlove, you have to drop everything and watch it. I mean, it's just two of the most intelligent, knowledgeable, guys out there. And so they're putting on this entire program around their playbook for how they adopted a Bitcoin standard for their corporate treasury asset. And you can see the commentary from Michael's. I've never seen so many CEOs sign up to attend one of our events. Not that surprising, right, given the topic, but it's very interesting, right? So think about all these corporations that have been pondering this question now for months, who are now being handed the playbook that Michael has used over at Microstrategy, which, by the way, has done them extremely well. I mean, they've kind of doubled that investment. It's pretty remarkable, or close to double it. Okay, so that's another piece of the puzzle, right? So we've got the retail dynamic via WallStreetBets. You've got the corporate movement via MicroStrategy. Let's also talk about some of the fundamentals. And if we take a look at the balance of Bitcoin on exchanges, I mean, they're at multi-year lows, right? And this is an indication that coins are going into cold storage. People are hodling them now more than ever, and that is going to drive supply shortages. In fact, we saw supply shortages last week as part of all the chaos with WallStreetBets, and so multiple exchanges are running into Bitcoin supply shortages. And by the way, we knew this would happen. This is part of the 4-year halving cycle that I've covered in prior videos. I'll put some links in the description below if you're more curious on that process. But this is massively bullish, right? So, you see supply shortage on exchanges. You see incoming potential demand from corporations, from retail, and then the final topic I want to cover in this video is just some of the different kind of social proof, but also government, kind of taking steps, at least in the US, which is very exciting. Miami. And so Cynthia Lummis, a senator in Wyoming, says, quote, "I came for the store of value, staying for the censorship resistance." This is extraordinarily exciting. Cynthia is establishing some kind of political financial innovation, group to educate politicians on the merits of Bitcoin and crypto more broadly. But clearly she's got a keen focus on Bitcoin, and I think this is terrific, right? You layer that up with Mayor Francis Suarez coming out saying the city of Miami believes in Bitcoin, and they're working day and night to turn Miami into a hub. They've published the Bitcoin white paper. There's this article that came out just a couple days ago in terms of what do they actually mean by this. And I'll just kind of leave you with these quotes, right? Miami is considering giving city employees the opportunity to get their salaries paid in Bitcoin. Local fees and taxes could be paid in Bitcoin. And finally, the city's treasury might place some of its investment capital in Bitcoin. If this happens, that is totally unprecedented, right? This would be an absolute first. It wouldn't actually surprise me if there are jurisdictions out there that have, kind of sneakily taken positions. But I mean, this is like how people still kind of come to me and say, well, what if governments ban it? Well, I think we're seeing some positive early steps there, right? And so if this happens, others will follow. And at some point you get to 20-30% of the population that has at least some Bitcoin. Good luck banning that, right? That doesn't mean that the government's not going to try and control it and tax it and all this stuff. And so we need to be ever vigilant of that. And so have a look at some of my prior videos on privacy and how you can securely take control of your Bitcoin. But this is wildly bullish. Now, if that weren't enough with Miami, with Wyoming, there was this article that came out claiming that university endowments, such as Harvard, Yale, had started buying Bitcoin, year back, 2 years back. And so it's a little bit unclear if this is actually true. And obviously none of these institutions are going to admit to it because they all want to go with, this mainstream narrative that, Bitcoin is for money launderers and all this FUD, et cetera. But so that's very interesting. So guys, that's it. That's a big rundown. So again, in summary, you've got this kind of interesting dollar dynamic, especially as it relates to new treasury issuance, which could in the short term create some positive support for the dollar, which in turn generally tends to be a little bit bearish for Bitcoin, especially given its value proposition. That being said, even if that does occur, I think it'll be very short term in nature. And all these other factors way outweigh that over the medium and long term. So, retail sentiment stirred by WallStreetBets, corporate activity likely to coming out of the Microstrategy event and playbook reveal. Other institutions moving in. I didn't even mention Ray Dalio. It's just the writing's on the wall. Keep stacking. Every sat counts. If you like this video, leave a like, subscribe, more content to come every week. And excited to hear also what you want to see in future videos, so make sure to leave a comment down below. But with that, I'm going to go ahead and leave it there. I hope you enjoyed this, and until next time, I'll see you then.
Miami, South Beach, bringing the heat,